I got portfolios on top of portfolios on top of portfolios. I'm invested in Robinhood, M1 Finance, Webull, TD Ameritrade. I got every single one. I test them out for you guys to show you guys if they work or not. And all of them are basically the same. So you guys don't have to be too worried about which one that you guys are going to be investing in. As long as you start investing, I think that's going to be the most important part of it. Today, we're going to be going over my entire portfolio of stocks and real estate. I'm going to give you everything that I own. I'm going to show you guys all of the numbers. So stay tuned if you guys want to find out exactly what it's worth. So I'm not going to hold out on you guys and show you guys my portfolio at the end of the video. I'm going to show you guys it right now. $143,818. My annual dividend income from this portfolio is $3,908. So I'm a relatively new investor. I just started about 2 years ago. And if we rewind back about 1 year from, or the beginning of this year, 2020, I will show you exactly how much money I had when it came to this portfolio. So this was my portfolio value at the beginning of the year, $35,500 with an annual dividend income of $1,270. That's kind of crazy to say this, but my portfolio is 4 times bigger today than it was at the beginning of the year. So let's take a little bit of a deeper dive here. So I'm not an expert at all when it comes to investing in the stock market. What I learned to do was invest into dividend stocks. You know, I tried penny stock trading. I tried day trading. It just didn't work for me. So I had to switch up the strategy. I went with something that would provide me some type of passive income without me working, but me putting my money to work. And I came up with dividend investing was a strategy that I chose. I'm more of a professional real estate investor. I own 2 duplexes and 1 condo in Brooklyn, New York, which I will go over later on, second half of this video. So right now, let's focus on passive income. Let's focus on how does this work? How can you guys use this strategy for yourself as well? So drop a like for the YouTube algorithm to get this out to as many people as possible, and subscribe if you guys want more content just like this. So let's take a look at the passive income here. We are seeing projected annual income of $3,908. So in the month of December, this is where I'll be getting the most dividends. January is the month that I'll be getting the least amount of dividends. I got to beef this up somehow. I want to be able to, since the beginning of this year, my goal was to get $200 worth of dividends every single month, $300 worth of dividends every single month. I've completely annihilated that goal in the past few months now. And the next goal is obviously going to be $4, $5, $6, $7, $8, and $1,000 worth of dividend income a month. 1,000 is the ultimate goal. That's I can't believe I'm even at 300 right now, $300 on average every single month. But let's not get too far ahead of myself. I'm going to try to, enjoy the process. This is a really big process because we're not going to have years like 2020 every single year. There's not going to be a giant market crash. You're going to buy the dip. You're going to buy as much as you can and then just ride your way up into all-time highs. Like, this is not going to happen every single year. So everything that you guys need will be in the links in the description if you guys want to see my entire portfolio, if you guys want to see what I'm invested in. So let's get back to it here. So let's scroll a further bit down to see all of the companies that are paying me dividends. I got companies that are paying me dividends every single month, like AGNC, and we have this bond ETF is paying me $13 every single month. All the other ones typically are going to be paying you quarterly dividends every single quarter, every single 3 months. Realty Income is paying me $40 a month for owning them, $484 a year. PSEC, we got, when I first started, monthly dividends was something I was really focused on, but that doesn't really matter as long as you get your money working for you. You're going to see passive income. SPHD is another monthly dividend paying ETF here. This one is one of my favorite ones. So in summary, buying monthly paying dividend stocks is good. It's good to have that, but you don't really need that. If you can just buy quality companies that pay quarterly dividends, you can also make that work as well. So now let's go into every single stock that I own. I'm not going to be diving that deeply into every single one, but I'll be showing you how much money I've made from each one, what are my gains, what are my losses, and just some overall stats that has boggled my mind right now since I'm looking at it. So now that the market is basically closed, my portfolio is closed at $144,000. So my portfolio just went up another $500 within this video, which is kind of crazy. My total dividend yield for this portfolio is 2.71. So this is something that I'm going to be working on to get it up to at least 3%. Over the last few months here, I've been working on growth stocks. That's something I'm completely unfamiliar with, and I'll be going over some of those companies that I bought recently. I think what you guys most likely want to see is gains and losses. So my top stock for this year is going to be Tesla. Who would have known, right? Who would have known? I made some bad calls with Tesla in the past. I've owned more shares than this, and I've sold because I thought it was overvalued. I was a complete moron. So from now on, I'm just going to trust Elon Musk. And, I'm a religious Tesla shareholder now. I'm looking to purchase a new car soon and a Tesla Model X or a Cybertruck. Those are some of the options that I'm looking to buy here. So definitely Tesla, I'm going to reward them for giving me so much gains by being a shareholder, being an equity holder in their company. So the second best performing stock this year for me was Lyft. I'm up 74%. Tesla, I'm up almost 400%. So throughout this video, I'm going to be giving you guys some tips when it comes to my portfolio and what I'm looking at. Like, I'm not going all out and buying Tesla right now, all right? I'm not going to be going over and buying all of these top stocks that are performing well in my portfolio. These are the stocks that potentially might be overvalued at the moment. So I'm not going to be going heavy into them, and I'll be slowly purchasing them a little bit at a time over the next few months. And that's another strategy that I implement a lot over this year. It's just buying every single week. So UPS, again, 69.9%. Very interesting percentage gain there. So I've been holding a lot of these companies for over the last year plus now. And typically, I'm not selling these stocks. I'm just buying them and holding them. That's another tip that I have for you guys. If you guys are just going to be buying it, selling it the next day, buying it back at a higher price, selling it at a lower price, just don't do that. That's probably the worst idea ever. If you're going to be buying a stock, make sure you know the company, make sure you know their product, and look for buying opportunities. All right. Typically, if UPS tomorrow dropped 10% for whatever reason, that actually might be a good time for me to buy more, which is also known as buying the dip. So fourth on the list here is Nike. A lot of these companies, I don't own that much equity in them. $2,000 is not that much. $690 is not that much. If I owned, in the future, I see myself owning tens of thousands of dollars worth of these companies. And that's something that you guys should look into as well. Are you going to be sticking with companies long term, or are you just going to be selling them off if they raise in price like 10% and you can just sell them off? Different people have different strategies, and my strategy is just to hold it as long as possible. Fifth on the list here is APLS. I own 16 shares, and it's up 62%. This one is another dark horse when it comes to my portfolio. I don't really go over this one that often because it's not a dividend stock. You can see a lot of the companies up here that are performing really well are not dividend companies here. So let's go over a few more that are dividend paying companies, and we'll look at some of the companies that I've actually lost money on. Yes, we all have companies that we lost money on, okay? Apple, really great company here. I own I own less than $4,000 worth, and I'm looking to own a lot more. I want at least 100 or so shares of this company. So when it comes to Apple, they're not a big dividend paying company. You can see this is the dividend yield here, 0.64%, and I'll be getting only like $23 in dividends. All these dividends, they compound over time. That is the magic of dividend investing, and that is what I want to show you guys over the next year as well. And lastly, let's see, we got Target here. We're up 52% on Target, very similar to Apple, but there are a 1.59% dividend paying company. Dividend safety score is very safe as well, and I'm going to see $17 in dividends. When these dividends get paid out, I am purchasing more shares of each of these companies. I'm buying more stocks with them. I'm not, spending it on stuff that I really don't need. I'm just going to be reinvesting it every single month, every single quarter, every single year. So now let's jump to the worst performing stocks in my portfolio. This is going to be a great transition because a lot of these companies down here, they were doing a lot worse than they are today. So let's go. We got Intel. I own 22 shares. We're down 5.6%. So this has always been in the top or in the bottom 10 for this portfolio. Ever since the pandemic happened, Intel has been hit pretty hard. So with Intel, you can see I'm down 5%, almost 6% with them. I'm still buying, holding it for a long term. Intel will turn it around eventually. If not, then, you know, it'll take years for this to pan out. I'm not in it for a quick buck. You know, these guys pay dividends as well, $29 in annual dividends. And on top of that, their dividend safety score is very safe. Nextly, let's go into ED, Consolidated Edison. I own 10 shares. This is about $734 in market value. I'm down 4.5%. This one is a pretty decent paying dividend payer, 4.19%. And I'm going to be seeing $30 in annual dividends from them. This one as well has always been in the bottom probably 5 when it comes to this portfolio. This one is a bit of a surprise for me. I kind of, if you guys are in my membership group, I talk about Google a few times here. I own 1 share. 1 share is worth $1,821. That's why I only own 1 share. And I'm down 3.3%. I'm not too worried about owning Google for the next 10 years. Me being a YouTuber, these guys are paying the bills right now for me. So yeah, I got to just reinvest in the company to keep it going here. So next we got PSEC. I own 300 shares. These one are the cheapest or the lowest costing shares when it comes to my entire portfolio, $5.49. Let's see. This is 1.1% of my portfolio, so I'm not too worried here. I own about $1,650 worth here, and I'm up 0.2%. So this one has been relatively flat all year around, and but it is paying me $216 when it comes to dividends. So basically, I'm up $216. When it comes to the gains and losses, it doesn't count for the dividends that are getting paid out every single month, every single quarter. It only counts for the price that I bought it and the price that the market is currently at right now. And now let's take a look at XOM. This is probably the most controversial stock in the portfolio. And this is a company that I'm still willing to buy here. So when I went heavy and started buying Exxon, like for the last 2-3 months here, a lot of people were telling me that it's a really bad idea. I shouldn't do it. But now I'm finally up on ExxonMobil. You can see my cost per share is $42.93, but the price today is at $43. So that means I'm up 0.3%. This is one of the highest dividend payers in my portfolio with an 8% dividend yield. So that means I'm getting $767 in annual dividends every single year. So the caveat here is that it is a borderline safety score of 55. So ExxonMobil, they're going to have a lot of obstacles over the next few months, over the next few years, just because renewable energy is a real thing. And a lot of people are trying to switch to renewable energy, but I think it's going to take a lot longer than that, maybe 50 plus years before that happens, maybe even more. But ExxonMobil, I'm still a investor, and if you guys didn't know, they are, you know, I think they created the lithium ion battery. Someone double check that for me and leave it in the comments down below. I'm pretty sure I read an article out there saying that. So some things to consider when working and developing your portfolio. You know, it took me 2 years to get to this point, and when you start investing, you have to have some type of strategy. You can't just go balls to the walls and throw all your money into the markets all at one time, all right? I invested a little bit every single week, and I got more confident, and I started investing a lot more. So now I'm pretty confident in investing about $1,000 a week if I need to into my portfolios. So lastly, let's talk about some real estate. Like I said earlier, I own 2 duplexes. This is one of these duplexes that I own. This is a beautiful 2-story multifamily rental. 1 unit is on the bottom, 1 unit is on the top, and this provides me with a lot of cash flow every single month. So you guys always ask me, how am I able to invest $1,000 a week? Or, you know, how am I able to invest so much every single month? And one of the reasons why I'm able to do that is because I own other investments that are paying me. And on top of that, I have side hustles. On top of that, I have my job that I'm working at every single day. So if you guys want me to make a video on all the incomes that I'm making every single month, let me know in the comments below, and I will definitely make that for you. So this is the second duplex that I own. This one is more of a ranch style duplex. 1 unit is on the left, 1 unit is on the right. I've made a few videos about this. I actually have an entire playlist that I take you guys to show from when I bought it, when it was completely messed up to when I fixed it up and to now that it's all completely done and finished. This is providing me with a lot of cash flow as well every single month. And this project took me a good 6 months to finish, from buying the property, getting the keys in my hand, to handing the keys to my tenant and having them pay me monthly rent. And lastly, I have a condo in Brooklyn, New York, which is something that my wife handles. That property, I'm actually planning to sell it and flip it somehow and maybe buy more property or potentially buy a new home for myself. That's something I'm considering with her, and we have to really discuss that further. But that one is also pushing in a lot of cash flow to me every single month. So if you guys want to see more content just like this, go check out these videos here. Don't forget to drop me a like and also subscribe to the channel for more content just like this. Hit that notification to get notified for the next video that I post up. Most likely it's going to be a follow-up to this one from your questions down below. And on top of that, I have a second channel where you can follow me. And follow me on Instagram if you guys want more content from me. I post there pretty much daily. And I'll catch you guys in the next dividend investing video. Bye.